It's the same thing like the circus lion versus
Yeah.
the lion in the savannas in Africa. Correct. I mean, but on the other side is circus lions live longer in captivity, but then there is a good fun about being the lion
Oh yeah.
out in the
Out
open,
and free,
and
yeah.
I think that's what entrepreneurial journey over a long period does. It's you see life as it is, you see the impact of what you're doing out in the market and ecosystem. It's very difficult to put you back in the box because now you have tasted the
Yes.
true life.
Yes.
Like, you're not just caged up. So once you have seen the true life, it's very difficult to keep you caged up, even though the caged up life on paper is very good. In India, when we were raising money for startups for the first decade, we were all talking about 1.3, 1.4 billion people, such a huge market. Even if it's 25, 30% of Indians who log into all these apps and all these SaaS platforms and pay for it, it's still the biggest market in the world, or at least the second biggest market. I think those myths have gone away.
Right.
Everybody's chasing the same 100 to 140 million
Right.
people in India, which have the money and the capital from a disposable income point of view and the will to spend. And because they are all chasing kind of a similar market, the overall expectation from an Indian market has become very limited. Very often, very good ideas come to India to die because the Indian diaspora, Indian population, psychographics, demographics, how they spend is all very different from rest of the world. It's very difficult for somebody to gauge
Right.
the ability of a founder. Let's assume you were a successful founder in the past,
Right.
or you were known to me for 12 years. It's much easier for me to put money down with you. So that building that one-to-one relationships, I think a lot of Indian investors and founders don't invest time in that also. Everybody just wants a stranger who will give you money and not ask questions, and you will be able to fulfill your vision. Because that has happened in the past and failed, people are more skeptical now. Investors are investing more into the founder than the idea itself.
Okay.
When I say into the founder, doesn't mean they just like the founder and they're investing. It's also backed with some results that they're able to put on the table. Because you know what 50 lakhs revenue or 1 crore revenue does for your company? It proves to me as an investor, or proves to many others as an investor, that you know that there are customers to this product. Those customers are willing to pay. You're able to service them. You're able to hold them. You're able to get new ones also. You're able to work with your co-founders. You're able to resolve the issues with each other. Fight on Monday and sit together and work on Tuesdays. You can keep your egos aside. I build the company, I build the company. You are able to recruit people. You're able to build their loyalty for the company. You're able to compensate them. You're able to have them part of the vision that they are executing also for you. So that to achieve that much amount of revenue, indirectly you have built a very strong foundation as a founder.
Hi everyone, this is Vivek Srivastav. Welcome to my channel. And today we have with us a very special guest episode. We have Mohit Sureka with us. And Mohit is the founder of Global Startups Club, which is one of India's largest startup and funding ecosystems. Mohit is also an author, a venture funding and business advisor. He has founded Mojo Capital as well as 3X Events, which organizes more than 200 events per year in the country. Mohit has in the past been a restaurant and bar owner, and I really want to talk to him about that, and has been involved in the restaurant business and started and founded a digital delivery business. So, wow, that's very amazing background, a lot of interesting experiences. I'm sure you'll have a lot of very valuable insights for us in this podcast. So thank you, Mohit, for joining us. Welcome.
Thank you, Vivek, firstly for having me here. Very excited.
So it seems like entrepreneurship was always in your blood, like right from the beginning. Did you ever do a regular 9 to 5 job or?
So right from the age of 14 or 15, I had this vision that I would, no matter what, have my own company and build my own set of company and brands. And in fact, my first entrepreneurial venture was when I was 15 years old.
Nice. What was that?
So, way back in the day when Vedic maths wasn't really a famous subject or an interesting thing to do, I was taking Vedic maths workshops with like 15 and 20 people, student batches.
So you're like the tutor.
I was like the tutor, and I have to the extent taken a full 200 people auditorium workshops at the age of
Nice.
16
Wow.
at places like Narsimhanji College, Vivek Engineering College, and whatnot. So those 2-3 years were the formative
Nice.
side of it. I have also been in the corporates with the likes of KPMG, Panelka, Foster in UAE, Golden Era Group in South Africa. To the tune of about 8-9 years, I was in corporates.
Okay. So
Last
you did go-
position being finance head of a very large division. Yeah.
What was your first entrepreneurial venture? That was, not the
Correct.
tutoring
Not in the
teens.
childhood. Yeah.
Oh, was it the bar or?
Well, it was the bar. So I think ever since 2000s, I was obsessed with wanting to own a chain of cafes. Okay, because the cafe culture in India was rising a lot, and that's when you had the likes of Cafe Coffee Day and Barista and Gloria Jeans and all of them springing up.
And Starbucks had just come in.
Starbucks came much, much later.
Oh, okay.
I was not in India by the time Starbucks came. And fast forward 2014-15, I was in Cape Town in South Africa. Few years into their industry, had a little bit of extra cash lying around with my corporate job. Came up with an opportunity to start from scratch a new restaurant and bar. So the cafe idea moved to a bar over a period.
Right.
The whiskeys were good.
Yeah.
And that's how I started Nomad Bistro and Bar in Cape Town. Eventually, we were a cloud kitchen and we were a group of 6 restaurants. Opened up a backpackers, opened up a guest house, had a whole ecosystem of hospitality. Became the 3rd largest events company in South Africa. Hosted some of the biggest lifestyle experiential festivals. So that was the South Africa leg of the businesses and journey that I did. That was the first leg.
And then obviously once all this got going, you left the regular job and
Yeah, the regular job and my entrepreneurial venture maybe overlapped for a year.
little bit.
And then it was good enough that I had to go full time into the business side of things.
Absolutely. And I'm guessing you were probably happier, right? Or
Happier is a subjective word because entrepreneurial journey seems like, hunky dory from far away.
yes.
Okay, everybody's talking about the good sides of it. Nobody talks about the bad sides, the downfalls, the depression,
The
not having
stress,
money,
tension,
the stress, the tension, your health takes a toll.
very heavy toll it's taken
Uh,
on me.
you go from being like a very cool looking, very nice dude to,
Right.
no proper time to eat.
Right.
You have 30 salaries to pay at the end of the month.
Absolutely.
Suddenly, and that's what your goal is, pay the salaries on time, pay the salaries on time. And so the first few years of entrepreneurship, I think people don't talk about it much, and it's actually genuinely a very, very difficult, terrible journey.
Yes. But I think, one thing, even though I've been through a lot of stress, tension, it's taken a heavy toll on my health. I mean, just the kind of workouts I was doing 5 years ago and what I'm doing now are just North Pole, South Pole difference. Like I was doing very heavy, intense stuff and now I can barely do anything, just
Yeah.
that much of a toll, the stress, tension and all the problems have taken on me. But I still enjoy the fact that there's that creativity. You aren't stifled in that little box
Yes.
in the corporate world. Every day is kind of this new journey, discovery almost, and you think much more open-mindedly. Problem solving out of the box type of
Correct.
all that. Whereas in the corporate world, it was very
So it's the same thing, like the circus lion versus
Yeah.
the lion in the savannas in Africa. Correct. I mean, but on the other side is circus lions live longer.
Okay. Do
Correct, in
they?
that
Okay.
sense. Yes,
Really?
of course
Okay.
they do. In captivity. But then there is a good fun about being the lion
Oh, yeah.
out in the open.
Freedom.
And I think that's what entrepreneurial journey over a long period does. It's you see life as it is, you see the impact of what you're doing out in the market and ecosystem. It's very difficult to put you back in the box because now you have tasted the
Yes.
true life.
Yes.
Like, you're not just caged up. So once you have seen the true life, it's very difficult to keep you caged up, even though the caged up life on paper is very good.
Yes.
That's now goes between your risk appetite, your your financial stability versus your a lot of different mix of factors come into picture. But yeah, nothing can take me away from being an
I
entrepreneur.
think same here. The only way I could work at a corporate is like in a consulting sort of way or a consulting basis. I
Correct.
think, that's at this point. Um, I think a lot also depends on the company culture and all that. At sometimes in my corporate journey, I was in a very formal banking environment, and that was not a fit for me at all. The very formal, regimented kind of setup. Something like a Google environment would have been maybe a better fit for me. But anyway, so I just wanted to explore your entrepreneurial journey. Whatever advice you can give startup founders in your journey. So it sounds like in South Africa you went into this sort of from entertainment to meetups, meetings and events type things. So how did you get into more the capital stuff? Because that's kind of, I would say, probably a emphasis, and that too from South Africa you came to India now.
Correct.
So
Born and brought up in Mumbai firstly. Okay.
Yeah.
Very much a Mumbaikar, very much Narsi Monji being my alma mater.
Achha.
South Africa, spent a good 9 years there in my course of work. In that sense, it was my karma bhumi.
Okay.
Okay. So learned my real work skills and how to deal with people, how to build things, how to build a brand in South Africa. Fast forward 2021, I think I was done with my abroad innings. You should not watch the movie Swades, you want to come back. But leaving the jokes aside, being from a CACS background, that's what my original background is. Being from the likes of KPMG, PKF, getting back into the capital markets and the financial sides of things was very natural again, because
Was it?
I'd seen both sides of corporate consulting side and building businesses, processes from a broad angle, to then running my own companies and brands for another 7-8 years. So I had equal leverage on both sides to get inside the venture capital side also. Plus the exposure Global Startups Club has given me personally, besides rest of the ecosystem, I think growth has been very tremendous.
Yes.
And the exposure, for somebody to meet 10 VCs a year is a big deal.
Yes.
We are meeting 150 a year on an average, or 200 a year. So when you have those personalized chats and conversations with so many ecosystem stalwarts on a regular basis, your knowledge also keeps growing exponentially.
Right.
Your experience grows exponentially versus somebody who's doing 9 to 5 even within the funding environment.
And that's what I want to speak with you more about during this podcast, is the venture capital side of things, investing
Correct.
side of it, because that's what probably the viewers would be interested in.
Yes.
Let me start off maybe by just throwing this out. What I've noticed is in India, there's much more of a very numbers-based investing
Correct.
philosophy. They want to make sure all your, you have so many users, your EBITDA positive, etc., etc. Whereas I think foreign investors are a little more risk tolerant. They look at the vision more than just the numbers. I mean, obviously they look at the numbers and all the various other things.
So if I compare the US market to the India market, in terms of startup venture funding also, let's look at them both to be very, very different economies and different market. US being a reserve currency of the world, the biggest export to the world is dollar and not any product. So the cost of capital in US is relatively very cheap. The interest rates are very low. The returns on stock markets like the Dow Jones and the New York Stock Exchange, Wall Street, and all of that is relatively limited. So when they invest in startups, they're trying to park away money uh, which can earn you better than 5 or 8%. And so what they are expecting as a return on investment is also relatively lower. There's more money circulating within their economies.
Right.
Okay, for example, during COVID, they printed $4 trillion, which is larger than the size of our entire economy, and they just printed it,
Right.
and they exported the inflation to rest of the world. So the companies there have more money to invest, relatively speaking. They can take the risk that we cannot take as a country and as an economy. So the macro factors are very different. Whereas in India, at a macro factor level, you have 7 to 8% as fixed deposit interest. 12 to 14% is what on an average people are making in mutual funds. 18 to 20 or even 24% people are making on equity ROI, the ones who know how to invest properly. And so what an average VC or angel investor is expecting out of a risk startup is already at 35-40%. Okay, that's where he starts from. That's the ROI he expects to not invest in easier places. Like, why wouldn't I invest in Tata shares and Reliance shares when I'm getting 18-20% a year? So that is where one side is the macro structure difference. And then at a micro structure level, a lot of the money in India at the venture capital firms and at angel networks is sitting money from other HNIs, ultra HNIs, family offices, other funds who are investing in these companies. And when they do that, that is also at a particular price level that they are expecting so much ROI.
So the venture.
So it's very ROI based approach in India relatively.
So the VCs are basically operate as a kind of mutual fund only.
In fact, the laws that govern venture capital firm registrations by SEBI, which is your category 2 AIF, alternate investment fund, is exactly the same as what you register a mutual fund. So there is no law difference.
So they're probably operating on the same sort of principles and everything. I would imagine foreign VCs also work in a similar way. They get other people's money and then put that in
Correct.
and then return the money, profits back to the investor.
Correct. And also the difference that has happened in the Indian market in terms of investment. See, the venture capital and the angel investment market in India is relatively newer. If you asked anybody, how do you set up a new company in India 15 years back, they would say bank loan low. They would, take money from family, friends, have their own savings. Whereas, raising money through private equity, venture capital, angel is a relatively new phenomenon of the last 1.5 or max 2 decades. So from that point of view also, the industry keeps maturing. So in India, when we were raising money for startups for the first decade, we were all talking about 1.3, 1.4 billion people, such a huge market. Even if it's 25-30% of Indians who log into all these apps and all these SaaS platforms and pay for it, it's still the biggest market in the world, or at least the second biggest market. I think those myths have gone away.
Right.
Everybody's chasing the same 100 to 140 million people in India, which have the money and the capital from a disposable income point of view and the will to spend. And because they are all chasing kind of a similar market, the overall expectation from an Indian market has become very limited. for startups.
Right.
So that's also hampers investments. Very often, very good ideas come to India to die because the Indian diaspora, Indian population, psychographics, demographics, how they spend is all very different from rest of the world. So again, the industry is going more towards that. We just don't want your MVP idea, which is MVP for people is minimum viable project. We want you to prove there is a product market fit.
Correct.
Now, by the time you prove product market fit, you have already had to generate a revenue of 50 lakhs or 1 CR.
Exactly.
And then very often then the founders say, now why do I want the money?
Exactly. That's the catch-22 I myself am running into is, for me to get to that point, well, I don't need you if I can do that by myself. And I mean, I need someone who'll see the vision and kind of help me in the vision.
If I have to give the devil's advocate side of it, what I understand from the other VCs and or the angel networks, the problem is a lot of them spent a lot of money on investments at an idea stage or a MVP stage. But then your execution skills as a founder,
right?
Okay, a lot of them didn't have it. A lot of them didn't know how to run a team, how to get a co-founder, how to be in a relationship with co-founder that let's just make it a successful workplace.
Right.
So, the failure rate of startups in India was also higher. It's a difficult economy to survive in.
Absolutely.
Logistics cost of everything is high.
No, everything is more challenging in India. There's no ifs, ands, and buts
Correct.
about it. Only thing is it's cheaper, but other than that, everything's tougher.
It's also cheaper in few spaces. The office rental space in Mumbai is more expensive than Dubai at times.
Right.
Correct. And the per capita spend might be lower.
Yes.
So from those perspective, also high quality employees in India are not cheap anymore.
Yes, that's true.
So you can say freshers are cheap.
And it's hard to find quality employees. Like
Correct.
They're very, very incompetent or require a lot of.
If you're looking for the 5 to 7 to 9 year experience, very good professional, an average cost of that goes to minimum 20-25 lakhs to 45-50 lakhs, which then again starts going on par with international rates.
Right.
And so there are those challenges from a startup perspective, which are there. Absolutely. And till a founder doesn't have the real skill set to solve those problems, how it's very difficult for somebody to gauge the ability of a founder. Let's assume you were a successful founder in the past, or you were known to me for 12 years. It's much easier for me to put money down with you. So that building that one-to-one relationships, I think a lot of Indian investors and founders don't invest time in that also. Everybody just wants a stranger who will give you money and not ask questions, and you will be able to fulfill your vision. Because that has happened in the past and failed, people are more skeptical now.
Yes.
They're like, okay, do the first fundraise between friends and family, and there are 3 Fs: friends, family, and fools. Okay, we'll give you the first check. And people want to see skin in the game of the founder. Very often, because of our Indian culture, our founders actually have much more money than they claim. Okay, we live in 3 and 5 bedroom apartments at times, drive an SUV, and then we'll seek 25 lakh funding from an angel because we are not ready to put our own money in. So that also, I think, comes into picture. Investors want to give money when the founder's skin is in the game. He's put his own 1 crore. He's put his own 50 lakhs and built on it.
Absolutely. Yeah. That makes sense from the investor standpoint.